Good afternoon. Welcome to the New York session. I hope you're doing well. Um, just double checking if you guys can hear me. Let me know if you can hear me. All right, send me a hi if you can hear me. And then we can proceed. All right, so send me a hi. All right, okay. Thank you very much. So today we are still on dollar index continued going up. I mentioned that I want to see price up here, so that's what I'm still standing with. We had an incredible run yesterday. Hopefully yesterday most of you caught some of the trade ideas that I shared with you during the live session. We actually shorted the New Zealand up in here, all right, and then we targeted down here, and it happened to go, or it went more than I expected right here. So I took advantage of it. There was news event at 11:45 that helped price lower as well, so that was great. We also had the trade on the British pound coming for this low, and that was great. Today I have this one here, trading this imbalance and looking for price to come back down below this low and trade to this somewhere here, right? So that's what I'm aiming for today, with obviously dollar going higher. New Zealand, I'm looking for continuation to the downside to come back down, close in this void, and then maybe attack this low. Okay, so I'm looking for continuation to the downside. The level that you're seeing was optimal trade entry and happened to have imbalance in here, so it was just selling this optimal trade entry and looking for continuation to the downside. Aussie, same thing, optimal trade entry, imbalance. This one is a little bit strong, so it's kind of going sideways for now, so maybe you can wait for a breaking market structure on this before you actually go in looking for some kind of a trade idea. Okay, dollar CAD this morning I had a buy and they ran me out. I was using OTE, and time of the day here, London, 7 o'clock, I bought this candle and it took me out, right? So I think it's a stop run, so I'll wait till it forms another potential buy idea, and I'm targeting up here, but I'm waiting for confirmation first. Euro pound, I think it's waiting on the news on GBP tomorrow. We have rate announcement on GBP tomorrow, so it's kind of going sideways, waiting for that news. So I also just don't do anything with the euro pound for now. Wait till the news comes out. If you're doing anything, reduce it to scalping. Okay, don't look for long term, just look for some scalping. But even scalping, I still don't like it, so I'll leave it up to you if you wanna chase anything on this at the moment. The rate announcement is tomorrow at 12, so that's when this will be allowed to move with speed. But until then, it will just keep doing what it's doing, and it will be very boring to trade. So I'll recommend sit on your hands and wait till the news event. All right. Gold, So gold has traded back to this imbalance and auto block, breaker. I'm looking for rejection to go back down again. All right. This morning I thought they were going to break this, but this is the power of auto blocks. We had a H4 auto block in here, and price happened to react off from it, but we do have a breaking structure here, so I want to see price go down. Yesterday, if you remember, when price traded to this, I mentioned that we are anticipating some weakness in the we're anticipating weakness in gold. So if you buy here, chances are it will not make the new high, and then it broke down. So I actually sold short on this candle here. Why did I sell? Because it failed to go, right? 1, 2, 3, and then 4. So I sold this one. So I'm aiming for this level, and it's come back to entry anyway. So next target is all the way down here. Okay, so that's a potential trade idea. We just happen to have come to 50%. If it gets to OTE, that'd be brilliant, but I don't want it to do that. And then we look for continuation to the downside. Oil, I just shorted oil above this high. Yesterday we talked about oil that needs to come down here, and yesterday was an inside day on the daily time frame, right? We've broken market structure. This candle, the low and the high is within that, so that's an inside day. That's redistribution on the high time frame. That's called redistribution. So if they're gonna go lower, as soon as this high is taken, you want to sell short. It's a pattern that repeats itself almost all the time if you have a directional bias like this. So I'm expecting it to drop all the way down and clean out these lows. All right, so that's the business on this oil. It might have some resistance in here because it's a breaker, but ultimately I want it to go down. And then Bitcoin and Ethereum, I'm still waiting for breaking market structure based on the daily time frame. I want to see them close above the down candle before I do anything in terms of buying. If not, then they're going to continue going down to optimal trade entry relative to this high and that low. So both of them you want to kind of sit on your hands for now, and then wait for market to confirm exactly what it wants to do, and then you can obviously take a trade. Okay, the yen pairs. Okay, I know you guys have not okay. Can you show the daily, and I'll take a picture again. This is the daily. So this is how it looks like. Let me draw it for you. This happens almost all the time, so you might want to take note of it. Right, price might be dropping like this, and then let's say this candle closed like that, but the next one that opens trades up. Right, the next one that opens trades up, and the high and the low of that candle stays in here. Right, it stays in here. Now it will be great if they have this as a gap. Okay, if they have that as a gap, that's fantastic, because if I see this, the next day I am anticipating a run above this high and then price dropping. Okay, but if there is no gap and it's like this, that's fine. Okay, when this candle and that candle overshadow themselves, that's fine. The main thing is this high and that low should be within this high and this low. Okay, when that happens, it's called redistribution. They are selling inside this candle here. So the next day price is gonna open, is gonna take out this high like that, and then it's gonna expand to the downside. If it doesn't expand totally with this candle, then the next day is gonna expand to the downside. Okay, that's how when you see the market maker buy and sell models, you can see the redistribution levels. Enigma, I'll talk about that. So this is the redistribution, and if you go through your charts, you will see lots and lots of examples, both buys and sells, by the way. It's both buy and sells. If you're buying, you use the low for the market to form the low, and then if you're selling, you use the high for the market to form the high. Okay, in this case, because we are going down, we use the high for market to run that and then reject. Okay, let me see if I can find an example. This is one of the early patterns that I saw in my development, and I actually had a whole, I think, 10 years back testing on New Zealand dollar. Okay, so I back tested it 10 years on New Zealand dollar whenever it does that. So I'm pretty confident when that pattern is available, that market 9 out of 10 is going to do that. If it doesn't take out the high, let's go back to this. 9 out of 10, if it doesn't take out the high, it will just go down. Okay, but if it takes out the high, it's very powerful. So I almost all the time prefer it takes out the high. Okay, I'll see if I can find example whilst going through this, and then I'll show you. Okay, so you can see how dynamic the move after that high is rated, how dynamic that is, because it's based on logic. That market is distributing and they went up there to take out stops. Okay, so I have a question here. May you explain why ICT call Enigma? What ICT call Enigma? Enigma is an algorithm that ICT himself, based on certain criteria that he looks at in the market, he uses in terms of his trading. Right, it's just like me saying this pattern here is called alpha. Right, what I'm just showing you here is called alpha. So anytime I see it, I trade it. It's not anything, scary. It's just a rule-based approach to the market that is highly precise and highly kind of sensitive to him. He doesn't want to share it. So it's like me spending time on the screen and discovering certain things that are very accurate, right, and very precise, and I don't want to share it. So I give it this awesome cool name, and Yeah, that's what it is. It's not anything. It's just you can come up with anything. I call mine the indicator that I've created, that has been created for me. I call it Enigma. It doesn't mean anything. It's just a name. Okay, the indicator that I use, I call it Enigma. So it's not anything. It's not any woohoo thing, right? So don't lose sleep on that. Okay, let's carry on. Let's go over here. Okay, so the yen pairs, yesterday we talked about them. I showed you where they want to go. So if you took advantage of them, well done. If not, then wait for the sell, because ultimately they're going to come back down again, right? So if you don't want to go with the counter trend, then sit on your hands and wait. We are looking at price going into premium relative to the dealing range that has been created. So if you look at all the dealing ranges on all the pairs, you want to target 50% as a counter trend trade. So you're targeting 50%. This one did hit 50%. That one is yet to hit 50%. Missed it. So I'm expecting them to reach that. Pound yen, let's see where pound yen is at. Okay, pound yen is at 50%, so I'm not surprised that it's giving that reaction. New Zealand yen, it's got a bit of room to go. And then Aussie yen, yeah, that one has also got a bit of room to go. Okay, so that's what we are expecting going forward. Okay, Aussie Swiss, I want to see how we're going to trade in here. It's OTE relative to this high and that low. So this New York session, I want to see maybe they might want to take out this high and then drop. It has similar characteristics going into tomorrow if they don't take out any high or low. Right, we have this, the high and the low is within, sorry, this high and low is within that. So we might have similar characteristics. There's an example here based on what I wanted to show you. Notice this candle, this high and low is within that. Next day on this one, I was actually anticipating them to run this high before dropping, but we open and then straight away price shot down. Okay, so I want to see either them going down from the H4 range here down, or they might attack that previous day's high. They might attack that previous day's high before dropping. Any of them, it's fine. Whichever one comes first, we are ready for it. All right, New Zealand Swiss, same thing. We have an inside candle in here, but they've already taken out the low, which is not what I wanted. It's sideways in my opinion, but it's more sideways to the downside than sideways to the upside, because we have a swing high over here. I don't personally have a trade on this because I don't like it. I don't like the way the daily is moving, so I'm not in any form or shape of a trade on this. All right, but this one you can look for a trade. Aussie CAD, this has been the trade of the week as well. When they started the week, I said price is gonna drop down here. That's still the case. I'm looking for price to drop from where we are. We actually have an imbalance in here that price reacted this morning, so we should drop from there and attack this sell side liquidity down here. Right, so Aussie CAD, we are looking for price to drop down to this imbalance. It went up, took out that high, broke down, so we are bearish. Euro Aussie, I'm looking at this level to see if it's going to provide a buying opportunity for OTE. Right, so somewhere in here, that's what I'm watching, if it will provide a buying opportunity. The daily did confirm a swing on the daily, right? So I want to see how we're going to react in here for a potential buy. It's a down candle, right? Reaccumulation. This is the opposite of the redistribution. This is reaccumulation. Okay, the down candle within that range is reaccumulation. This took out previous day's high and it's yet to break a short-term low. But once we take out this short-term low, we are looking at this and then that. So they are all low resistance in nature. We just need a short-term low to be taken, and then we are game to go and attack that. Okay, so be patient, let price take out this low, or at least close in this imbalance, because that imbalance is still open here. We haven't closed it in. It's still open, right? So until then, you know, it's gonna try and make one more high, but I don't want to see it come up here. It can make one more high above that high, but not come up here. Okay, so this is where you can anticipate a stop rate, right? You can anticipate that to happen, and then down we go. So yeah, look for stop rate. If they don't break this and they go up, I will anticipate that as a stop rate. Okay, and then finally pound CAD. Yesterday we talked about this, selling short here, targets in there, partial, and that's what we have. This morning we traded into that imbalance, and we are looking for price to go down there. So dollar CAD, I'm sorry, pound CAD, we are bearish. I like this imbalance that is being created. It's similar to that one. So if we retrace back to it again, this is the drawn liquidity. Once this candle closes, this becomes a very good level to anticipate retracement and then attack that. So if we don't get down here and we retrace, know that it's a sell opportunity from here to go and attack these lows. Okay, all right, so pretty much that is it from me. Any questions so far? Let's go back and inspect all these pairs. I have a hard time knowing where the range begins. The range begins when there is a stop run. Okay, the range begins where there's a stop run, so it begins here. That's the range, and then one is here when there's a stop run. depending on the time frame that you are going to use as the dealing range, and that's where you start looking for first price going above a short-term high, and then showing displacement, showing a breaking market structure, right? And then you find on the downside where price took out low, and then show displacement, big range candle, leaving a gap, right? That is your dealing range. So here we took out this low and then broke above that displacement. Same thing here, down, displacement. So this high to this low, it's your dealing range. All right, perfect. Any other questions? I can't believe DollarCat stopped me out and then rejected. Now let's have a little discussion. Just write it down somewhere. Write it down somewhere, and over time you just need a couple of examples and you'll be fine. All right, you just need some examples and you'll be fine. Let's have a discussion about stop runs and how you can anticipate them. When, where. Okay, so I want you to think about this pattern here. All right, I'm giving you guys quote unquote what you can do to anticipate stop runs or stop rates, and it's gonna take you it's gonna take you time to kind of start seeing it, but you will eventually if you wait for, if you have enough examples. Okay, you just have to get enough examples, and then it will be obvious to you going forward. Okay, so how you want to see the rates is, first of all, think about this pattern here. All right, what actually is happening here is that someone, okay, with a lot of money intentionally bought price up to take out the quote unquote stops that resides above this high. Their motive, their main motive was to do what? Was to sell. But because they don't have enough position, this is how they can get the position. As price is going up like this, people will be buying. So as people buy, or institutions buy, they are selling, right? So as it goes up, someone buy, they sell, so they pick the position. So that's what's happening all in here. Okay, someone buys, they sell, someone buy, they sell. And up here, because it's a breakout, okay, because it's a breakout, there's going to be a lot of orders sitting there, or new orders coming in, because there are breakout traders out there, so they want to buy when it's breaking out to go up. There are algorithms that do that, right? So when it's breaking above this side, there's a lot of orders that will pile up, plus anyone that sold short, their stop loss is up here, right? So it makes sense that there's going to be lots of orders that is going to reside above this high. So when that happens, okay, the quote unquote institution that actually pushed price up to sell down, now they are in control and they are going to have stop losses above this high. Now think about it this way: if this was institution A that sold here. Institution B sold there. Institution C, right, looking at this will think, okay, hang on, if this went down and someone bought it up and sold up there, whoever is up here thinks, okay, this is where you have to use a little bit of imagination, thinks that they are safe with their stop loss above that high, because what happened here, we've already taken out stops, so price is not supposed to come up here, right? So we do have Fair Value Gap, we have Auto Block. Price is not supposed to come up here, but if price is able to do that because institution C can see huge amount of orders sitting up here, more than it was there, that's where they're going to sell. Okay, hence if they can push price to get to that level, that's going to trigger even more sells, more than the initial sell that happened here. All right, so then if price gets above this high, not this one, this one, it gives you every kind of reason to anticipate. I'm not saying it's going to do it, but anticipate that kind of pattern, a drop, because price is not supposed to go up here. And when I say it's not supposed to, that doesn't mean it cannot do it. It can do whatever it wants. Okay, but in the normal price action or algorithmic, this high has been taken, stops has been taken. We are only allowed, or price is allowed to come here and mitigate and go lower, or trade to the imbalance and go lower. So if it can get up here, then that's going to trigger more sells in the market, and then price gets here and then you expect price to drop. So if you notice now, this pattern is not, okay, you need to maybe write this down. It's not candles, it's not something like this. It's not this. Oops. I hope you can see well. I want to show you conceptually before I actually show you on the chart, so you can understand it properly. I'm not talking about this high and then price goes above it and then it breaks down. That's all part of it. But I want you to think a little bit deeper, right? Think a little bit deeper, or try to look at the charts with a different kind of eye. Yes, this is the same thing as this, because we went above this high and then we broke down. This is the low. Okay, this is this low here. This is that high there. This is that high. When this happens, yes, this high is subject to, if we go above it, it's going to drop. But I want you to think candlesticks on their own. I want you to think candlesticks on their own, because inside that candlestick, right, maybe this is a 1 hour. On a 5 minutes chart, it's like this. Okay, on the 5 minutes chart, it's like this. But on a 1 hour chart, it might be like this. So if on a 1 hour chart we have something like that, right, it's a stop rate. It's not closing above it. So look at the pattern properly. This closes back down. It open, it run up, back down. So it's a stop run on this high, and then price breaks down. On the lower time frame, this is actually what's happening. So that candle's high becomes like a the same thing as I drew before. Those candles with that pattern, right? Not just individual candles, but lots of candles with that pattern. The same thing applies here. Okay, so if price goes above this high on a 1 hour time frame basis, that can trigger a drop, and that's the case of what oil did. So you might not understand why this drop is so significant, but this is what I'm teaching you right now here. So this is a high. So whoever sold up there, in their mind, drop to the 5 so you can see it. In their mind, right, price is not supposed to come up there. So this is the pattern, right? So they took buys here to run up, to sell down. So whoever sold, right, they are thinking that they are safe with their stop loss above it, and then price comes back and hands it down like that. Okay, so if you see any high which is higher than a previous high and the candle doesn't close, like this one here, right, that's a stop rate. Okay, price comes up above it, we want to see it reject. Let me see if I can find examples here. That's a stop rate, right? Price takes out this low and then rallies. If price comes below it, but you're not supposed to come there, you anticipate a raid. Okay, let's go back to the British pound. Like for example, this one here, right? That high right there, because we rated this high, if price comes back above this high, that's a stop rate. You can anticipate a reversal unfolding above that high. That's why I got stopped out on this and it's rejecting, because it did rate this low. So all that explanation was to tell you how, I got stopped out and it's still going my way, or it rejected. That's a stop rate and price went up. So here is going to be a stop run. It's not gonna go down, it's gonna take out the low. So sometimes when I'm in a trade and it's going to fail, I know that if they stop me out, it's going to reverse. So sometimes I can either take the loss, okay, I can take the loss and then try to get in on the reversal, or I'll leave the trade but then move my stop loss just a little bit away from the low. Because if I'm wrong and it doesn't go up because it came back, let's say it came back to the imbalance in here and it's supposed to go up and it doesn't, and it's coming back down, and I know deep down we do have that pattern on the downside and it's going to reverse, and depends on how sometimes depends on how my account is looking like. If my account is okay, when I say okay, let's say we started the week and I've made lots of returns, then I don't mind taking that loss. But if I've not made, let's say, nothing for the week and it's the first trade and I know that this is happening, I'll find a safety level. Say we have this auto block here, right? I'll put it just below it, and in my mind I have accepted this is a something that if you're not psychologically good, you don't do it. I have accepted that risk. Okay, I have accepted that risk, meaning I'm willing to lose that if it goes there, because I'm just I want to see if it's going to be a stop run because of the pattern. It's not because it's going to stop me out, that's why I'm moving it. No, it's because I understand the logic behind this law, right? So if I think it's going to be a potential stop run, then I'll shift my stop loss a little bit to see how price is going to trade below it. It doesn't mean again I'm going to close the trade here or take the loss there. Pardon? Well done. Right, it doesn't mean I'm gonna take this loss. No, how we trade below this is going to it's going to give me a hint, because if they trade down and then close below it, that's it, I'm closing that trade. But if they go below it and then immediately reject, I know that it's a stop run. So I'll just watch it, let it break, and then I'll buy more again. Okay, and then you do the same thing for the upside. If you are anticipating say price went to your level and you sold short and it's going just up, and you feel like it's going to take you out, push your stop loss just a little bit away and then see how price is going to trade above that high. If they close above it, close the trade. Accept that you're wrong and close the trade. If it doesn't and it rejects, find a short-term low. Once that short-term low is broken, you can add another trade to it, because that is going to give you a bigger drop. Okay, let me go to this trade and show you. Here I sold above this high because of that, but the level that I anticipated that they should not go beyond, they went beyond it, so I closed it. Right, I sold above that. Why did I do that? Same thing I'm telling you here. This one, stop rate. So I anticipated that they're gonna run that high and reject and go lower like this. All right, but the level that I looked at for them not to breach was here. So if they breach it, then it's not good for me, and I'll close the trade. But eventually you can see what happened. There was another trade that I did the same thing. It was Aussie Swiss. That's 2 weeks ago. I'm sorry, pound yen here, or last week, not 2 weeks ago, last week. This high, that high. Did price stay above it? No. It broke market structure? Yes. So above that high, you want to anticipate a reversal, right? So price runs it, you want to sell short. So this is the secret in selling turtle soups. If you're looking to sell or buy turtle soups, if you know what turtle soup is, basically you're buying rates or selling rates. If you want to sell above a high, don't sell this one, sell the next one. If you want to buy a low, don't buy this one, buy that one. But you have to have context, and that's where the problem is. With context, then you can do it. Like this one, I sold it because I had the context. I started the week as bearish, so if it's bearish and it's going to do that, then obviously that's bonus. Okay, so you have to have context behind you. Once you have context, then you can apply what I just shared with you right now. That's the way to use stop runs for trades, right? If you want to trade stop runs, this is how you do it. Identify where they've already raided. You're not going to sell the first raid. So for example, this one raided that, so you can attempt a sell up here, depending on the narrative when we get up there, right? But this one, okay, you cannot sell that one because this has not raided anything. If you are expecting it, you can use superficially this one, but I wouldn't use that because I was not expecting a sell happening here. But because I was expecting a sell to happen here, then it makes sense to use that. Right. So whenever you're looking to sell or buy, and price runs a low and you think it's going to be a stop rate, check how it did the rate. Has there been something like this, right? What makes, why do you think price rejected this low? Okay, why do you think price rejected that low? Because of this. I actually created I backtested this for years, not years, for hours, and myself and a friend of mine, we actually created an indicator for it, but that indicator, it's not mine, so I cannot share it with you guys. See if I can find it. It was just an aid. Yeah, you knew it was going up, but you didn't know exactly where, right? This one. Let's see. We actually created an indicator for it. It's updating. There it is. So it's going to plot anywhere we have, based on price action, anywhere we have that. So we have this rate here, so it's going to use that level as an important level that if price gets there, you want to pay attention to. And then on the downside, we don't have anything like that, so it's not going to give it. But if I drop down to a different time frame, it's going to give something. Yes, you need to have some kind of logic behind it. Okay, when it's doing that pullback, it's not just doing the pullback because it's doing it for doing its sake. There has to be a logic behind it, so when you're trading it, you have confidence behind you. Okay, so this is another level. If price trades below it, it's going to reject. So that's what this indicator was created for me for. It points out where these levels are going to reside, and then you wait for price to attack them, and then you sell. Okay, but I've just given you how it looks like, so you can obviously trade it. So something like this, high, that X, that's an important one. High, that X, that's an important one. We have a low, important one. You get what I mean. Okay, you don't need the indicator. I don't use it because I can see it, and you don't need it either. But initially, as a concept, I wanted to see it. I wanted to see it without me kind of thinking, right? So that's why the indicator was created. Without me thinking, it would just plot them out for me. But it's like a training wheel. Once you know what it does and you can see it, you take off the wheels and then you just trade it. Any questions? On seasonal exchange purple, and then a small pullback again. Yes, so it's, you look at the fifth. I think you have to look at it from a weekly standpoint. So if you look at from the beginning of the week to end of the week, that's how you want to look at it, based on that weekly range. How is it going to trade, right? So let me actually show it to you, because you might need it. make good use of every question that you have. So if you look at here, right, the third is where it actually starts dropping to the fifth, right? So the week ends on the fifth, so we do still have a drop to go. It's either it's going to drop or it's going to stay sideways, but whatever happens, expect weakness in yen. That's all you need to do. See that as weakness in yen. Okay, so as long as you see that as weakness in yen, that's all, and then the rest, just look at price action, because if price action is giving you the impression that it's going up, why would you want to go against it, right? It makes no sense. So stick with the price action, and then if anything changes, then you change. But because the seasonal says weakness till end of the week, especially if you're looking at this, right? This is the yen. So if it says weakness till end of the week, where do you think the week will end? Today is Wednesday. We have an impulse leg, okay, and price is retracing. So it's generally going to trade to optimal trade entry. So a bit of price action is also needed. This is low resistance. Right, we've gone through this imbalance, market maker sell model, so we're gonna trade down here or down there. This being the impulse leg, at least 50% we've traded there, and then that pullback happened, so we're expecting 618. So more weakness in that, and more push to the upside on these. All right, any more questions? Same thing applies to gold, right? If you look at gold, the seasonals for gold, if you look at the seasonals for gold, right, you will see that the week here, right, from the 4th, we have a significant drop to the 5th, and then the 5th it forms a low. So whatever happens between the 1st and the 5th, there is a drop. So you stay with that weakness, and then from the 5th we have another buy. So if you look at gold as it is right now, and it says we dropped till the 5th and we're up here, and we do have this market maker sell model happening, where do you think it's going to trade to? OTE, relative to the dealing range, right? That's why I pointed to you earlier, using this low to this high and using the OTE. Actually, I flipped it, right? 618 is here, 70.5 is there, right? So I gave you that we might trade here, right? So that's where you look for price to trade to, and trade every pullback, sell every pullback. This with the seasonal tendency, right? It's gonna require you to have experience on how to use it. Now, I had this back in 2019, but I didn't know how to use it properly, because when it was in my favor, I could use it for long term, but looking at it from like a weekly perspective like this, That was something that was that's not something I was doing with it. So I was trading it based on the long-term perspective. So if let's go back to what am I showing you my questions. If you go back to that, what I was doing back in the day was I was trading this perspective. I was not trading these minor pullbacks. So I look for the low to form, and then I'm looking for that to continue going up. I was not looking at this minor retracements, right? I was not looking at that. So when I was using it back then, these movements, they actually did hurt me, even though I was right in the direction. They did actually hurt me because I didn't understand that they count, right? I didn't understand that they also count as retracement and how to apply them in terms of looking at the weekly ranges. So if it's going up, it might be going up for a month, but there will be a week that price might want to retrace, like this one here and that one there. Price might want to retrace, and if you don't understand that, right, then even if you're bullish, they can come back and stop you out. Who taught me how to do this? No one. I taught myself. Try and error. It's all try and error, try and error. You have to, that's how you learn. You do it, you make mistakes, and then you recover. That's why, most of the things that I share with you guys, they are very close, they are very dear to me, because I have gone through I've lost a lot of money, let me put it that way. And I lost it because I was doing things like this. I have the knowledge, but the right application of it wasn't clicking. So then it has to go through applying, making mistake. It's just like Thomas Edison, right? He was trying to figure out how to do the light bulb or create electricity, whatever he did, and he did it 1,000 times, right? So he not failed 1,000 times, but he found 1,000 ways to create whatever he created. So that's what I did. Spend time doing it. I remember 2020, I did it for 1 week and it played out to the T. Everything. That's what I used to pass my funding account, 3 funding accounts, because I was doing something like this. Oh, the fifth placement is just me. I'm looking at levels that trade ideas might form. We've discussed that in details. How to anticipate where trade ideas are going to form. Okay, let me go and take some profits on some of my trades, because if not, I wouldn't be happy. Now, with all this information that I've provided for you guys, right, it's gonna take you time to kind of use it, but once you understand its application, once you truly understand them, you can be doubling your accounts every week. I'm not saying you should. I'm not saying you should. You can take this trade. You can take that trade with confidence. You can trade that trade with confidence. You can take that trade. That one stopped me out, but it still went my way. You can take that trade with confidence. You can take that sell with confidence. And those trades alone can double your account. it's not bragging, but you know, you will get to the point where basically you understand price to that level, so you're not even scared. Okay, you're not scared to take the trade because you understand what's happening right here, right? I said price is gonna trade up there, and that's where it's going. So these will not scare you. All right. Let's go here. I get scared and I get out. Yeah, that's that part you need to train yourself. I've just been looking for consistency at this point. I have been break even for the past 2 weeks. Okay, so question will be, if you have been break even for the last 2 weeks, what was it prior to that? Okay, what was it prior to that? Was it profitable? Was it not profitable? Because if it was not profitable, then being at break even is good. Okay, if it was profitable, okay, let me choose my words carefully. If you were profitable and now you are break even, then there is a psychological problem, right? That's a psychological problem. It's nothing to do with what you're doing. You do have the fear of not the fear of losing the account, or the fear of I don't know how to describe it, but you do have this fear of not getting the profits, right? So when you take a trade, it's like, okay, is it gonna go my way? Is it gonna go my way? Is it gonna go my way? That kind of fear. So it's nothing to do with the charts. It has everything to do with the mind. So you probably need to work a little bit on your mindset. Because everything that you're getting now, right, is more or less, it's like, it's the real deal. So if it's not working, then there's something wrong with the mind, not the application, right? So maybe you get out of your trades too quick, or sometimes it could be the fact that you got a very good entry and price is moving in your favor and you close the trade out too quick, and then if the one that doesn't go your way, maybe you move the stop loss a little bit, or it takes you out. So your wins are not not bigger or 2 times 3 times bigger than your gains. So then you end up breaking even, right? It has to be something like that, because if you are getting it, let's say for example, right, if you took this trade that I gave yesterday, right, and I said take profit here, and then it got here and it started rejecting and you took profit, right, and then you take a, let's say this as an auto block, you take that as a trade, and then it stops you out. Now the gains that you make here doesn't justify this stop loss, because eventually if you take stop loss like this and you take trades like these, you're gonna remain at break even. Okay, so you have to grow and have confidence in your trades, and then allow your trades to give your trades room to breathe and let them go to your TP, right? Don't be closing out your profit prematurely. Okay.
Yeah. Yeah. Wait. No. Wait. Number 5.
Let's look at gold.
Okay.
All right, no problem. Gold takes out this low. We are reaching for 1747.
Oh. God.
That was a nice trade. It's closed me out. That was OTE. I took it yesterday. I placed the sell limit without actually remember this morning, and it actually kicked me in without being aware. Right, boom, out, done. I didn't even take partial. Right, it went straight to
Where did it go
TP.
backwards? Stop. 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 Please stop. Stop. Yeah. Oh my goodness. It's dark. Whoa.
Aussie's also yet to go and attack this low. Now look at this low. Right, based on what I shared with you today, does this low look like if price takes out this low is gonna reverse? Right, put your knowledge to test. Does this low look like if price takes out this low is going to reverse?
Whoa. Wow.
I'm asking a question, right?
Rainbow.
And then compare that to this one, okay? Because this took out this low. So, you know, hidden what happened here.
Where did it go? This way. Stop.
Yeah, I'll go back to gold, but I want you guys to kind of understand what I'm trying to teach you. Look at this
This one.
run. What happened? Stop rate. Why? Because we took out this low. So price coming down here is going to be a stop run. Boom. Price went up. But this, we don't have anything like that here. This low is higher. So we don't have a raid. So if price gets here, it's not going to reverse. It's gonna go for that one.
Yeah.
And then maybe that one, it might reverse because we have this and that. Okay. So this is a low resistance. Gold. I'm sorry, can you go? I missed why it will go to 1747. 1747 because of OTE. Because of this. But we are looking at here, right? That's 50%. So we want this one first. Perfect. So that's it. I've gone beyond my time, but that's fine. I just want you guys to get understanding and yeah, trade accordingly. All right, no problem. Watch it again. AUD CHF reacted off the H4 fair value gap. Let's go and have a look. Yeah, start watching it on the, so let me give you guys another hint. I have too many things in my closet. When you're expecting things like that, always look at the futures market. Say we are expecting this to drop like that, right? Look at the futures market and see what the futures is doing, because you want to see, where is Aussie? You want to check the relative strength between these two and then see if it's going to actually do it, right? So looking at the so we took out this high, obviously, and it's dropping, and then this also went into OTE and it's kind of staying there. So based on the H4 currently, okay, based on the H4 currently, there is strength in Aussie, right? So if there is strength in Aussie, it's not going to permit that to drop. But at some point, if it's going to drop, there will be a shift. So what I would do, or what, let me show you what I'll do. I'll go to the daily time frame and then study this chart right here. So where I will anticipate some kind of a market reaction will be below this low. Why? Because we had a stop rate here and then price went up. So we have a market reaction below this low here. And on this one, because there's a, take this one out, because we rated this before price went up, that's why it's struggling to go down. So this needs to get here, and then once it gets there, it might give some kind of reaction to go up. It might give some kind of reaction to go up, and then at that point come onto this and it should be ready to be going down. Or pay attention to that and then look at the swings, and then by the time this happens, you see this will be on its way down. Okay, that's one way that if I'm anticipating a trade idea on certain pairs, certain currencies, that's one way that I do it, right? Because it's not going to happen by magic. There has to be some kind of logic behind it, right? So because it's not dropping, it's because there is something happening. That's why it's not dropping, and you can see from the futures market here. This one is dropping, that one is not. So by default, Aussie is going to be strong. But if you look, this low, that low, that low, that low, there is no stop rate. Here there is. So it's going to react here, and then it will have the same strength as this one, and then by then it should be ready. By then we should have broken a short-term low, and then price goes down. Down we go on gold. So with the way the yen pairs are moving, right, they are moving aggressively up. That's exactly what I anticipated this week, right? But this aggressive move to the upside, it's just a pullback. Okay, it's just a pullback.